Hello everyone, this is Otsu, and this is Observations with Otsu. It's been a few weeks since I rolled one of these out. I've been very busy. I'm happy to say that I am back to normal, back to square with these things. Observations with Otsus are going to run on Mondays typically, right after sometime about 24 hours within the weekly close. Since the time has changed, it's a little bit later for me, and that's completely okay. That actually might work a little bit better for me. With all that being said, this is just a review video. We're going to cover, I usually cover the total market cap. I'm going to cover less of those as we continue on. I think a lot of that context is going to be with Bitcoin, so we're going to focus on Bitcoin after that. We might take a brief detour to the the Bitcoin dominance chart. We're going to go to Ethereum. And then we're probably going to look at Binance and Dogecoin, probably these. I don't think we're going to go outside the bounds of these. We might pick around a little bit more and look at some other alts. But really the main idea of observations videos is to observe the market from a weekly perspective and how can we gauge that going on. If you're interested in more altcoin based videos, those are going to be on Wednesdays. I have an altcoin gauntlet video series as part of my Apex Academy. That was a paid academy. That was a paid group, so to speak. That's complete. That was only a 12-week course. I'm happy to say, from popular demand, I'm going to take the altcoin videos, do a condensed version of those for free on my YouTube channel. So those are going to be coming very shortly, perhaps this week or next week. In addition to that, I'm going to be rolling out some topical based videos. I'm going to roll out a lot of videos. I'm actually going on a 25 to 30 day trip around the world. Most of my time is going to be spent in Asia, and I'm going to pre-record a lot of topics, and I'm going to roll those out about about twice a week, so to speak, in those 5 weeks that I'm going to be gone. And I'm still going to do the review videos live, so to speak, while I'm traveling, and so that's going to help me get a little bit more strategic about when I record, while also giving you the right amount of content. So, and let me know, if you guys like something, if there's something you prefer for me to see, and all, kind of all that, because I want to cater to the audience. You guys pay attention to me for a reason. I'm just a normal guy from Missouri. Nothing special about me, honestly. Grew up with the trading sphere. I have 6 years into crypto, 8 years total trading, and a lot of you guys like to listen to me. So I'm going to do kind of a brief mention of all the things I've got going on, and then we'll get to the charts. And I know a lot of you guys follow me. You probably are not watching this unless you have followed me in some regard, because the only place I promote my videos is, I think, Twitter. I don't think I post them anywhere else unless you found me organically on YouTube. But I have my Twitter there. If you want to, anything that you see that you like, feel free to tweet, retweet, comment, whatever. I'm an easygoing guy. A lot of people say that I'm just easygoing, honest. I just had somebody today say that to me. I gained a new client for my business that just said, "Hey, I'm coming back to you because you've just been so honest over the years," and that's good. That's really helpful for me to know that there's a lot of bad actors in this space, and I don't promote myself like that. So it's happy to see people succeed based off of something that I may have told them. So I don't try to give you any kind of unnecessary content, so to speak. And also, in addition to that, I've got a semi-private Telegram. I say semi-private because it's free. Anybody can access it. You just got to find it on my Twitter bio. I'll try to bring a link into the YouTube as well. If you want to go there and see more of my detailed thoughts, you can. It's typically just more detailed thoughts that I just can't explain over Twitter. When I first created that, Twitter would not let you post long posts, and now that they do. But that's not going to change my content there. I'm going to leave it a little more privatized content. That's also going to be where I share my small caps. So I will not share small caps typically on Twitter until after they have already pumped, after we have discussed them in Telegram. So if you want small cap content, that's the only place that I'm going to share it. In addition to that, I have 3 services, I've got the Apex Academy. The Apex Academy is over, but you have access to all the previous content as a one-time charge. I'll leave that in the description below as well. In addition to that, I've got 2 upcoming things. One, I got my Arun Pro bots. They are coming. It's been a long time coming. I ran the beta test with the Apex Academy and everybody loved it. We got about 120R in a 3-month span. That was really good. We launched at December 4th. And as you can see, let's go to the 1-day chart here. It was good for us. We launched right around here. So, and then you can see now we're up here. So we did a lot of success. A lot of that could be market-based. I'm not here to necessarily brag about that or nothing like that. It's not my goal. My goal is that was more of the polished beta run. Now it's officially coming out, and it's coming out very likely this week. I've got a wait list. I'll link that in the description below as well. That is a paid service, though, and I'll have different tiers for that. The smallest one is going to be relatively affordable, and I might even do a Bitcoin version completely for free. So one more thing on top of that, one thing I haven't discussed too much is I'm going to do an advanced journal, and that's going to be more of it's going to be a Discord thing where I create a group and I discuss my private trades. I discuss how I'm playing the market. I will give you proof that I am trading if I can, but that's going to be a much more intimate approach as far as like how I process coins, what I'm thinking, why I'm thinking this, and how I'm analyzing the market and what I'm doing. And so that's going to be kind of a hybrid, kind of like a portfolio group slash. I will talk a little bit about bots as well. So if you're interested in the bots, I will mention those like when I'm taking positions and things like that. So that's another thing as well. That's coming up, I think, in April. I'm mainly deciding if I should wait to come back from my trip before I launch it, but we will see. Anyway, that's all that. I hope that didn't take too long. Like, subscribe if you want to, and we will get started. All right, so we're going to do a little bit of a brief here. We're going to go to total market cap. And as I said before, this is a weekly perspective. Observations is just to observe the market, not necessarily looking at any kind of detailed analysis, more just broad spectrum of what we can see and how we can react to it. So we're going to go to the total market cap. We're going to go to the weekly. And this past week was actually a very big week, so I'm not going to spend much time on the total market cap as I usually do. I think I'm slowly going to phase this out, typically because I spend 20 minutes on the total market cap, and you can't trade it. You can do pretty much 80% of the analysis on Bitcoin as well, so there's no bother necessarily. So one thing that we can look at here, we had a big impulse. We did not have a divergence with that, and that's what a lot of people were looking at. You kind of got this play up here, so we're kind of approaching some resistance in that regard. You also had kind of a flip here. This was a few months ago. This was early January. We had the drop down to that. This is more impactful on the Bitcoin chart, which I'll show you again here in a second. But right now we're kind of stuck in this range, and it's a little more complicated than that. Since this is kind of a bigger range, so to speak, and I don't necessarily think we're going to go down there. I've been very vocal. I've been very brash about my tweets lately that I think this is the end of the bear market. I've said this really since December, even November, I believe. I'm not sure exactly where, but I said $25,000 on Bitcoin will signal the end of the bear market, and I do believe that's the case. And so what we got here is a very, very market cycle looking chart. Honestly, this represents a really good pattern of a market cycle. I mean, you had your complacency here, you had your capitulation here, and I want to kind of briefly talk about that just a little bit, because a lot of people are just really adamant on just saying like this, like we have not, like I've seen people, I should backtrack, I have seen more people than I think there should be that say we have not entered capitulation yet. And I'm just thinking, what? Because this here in the purple is clearly capitulation to me. Capitulation is just a long. It's a very short time. It's usually by default a short time frame impulse down. That's a reaction of people getting out of the markets, and that's exactly what we had. If you don't agree with me, that's okay. You can also make the case that the FTX was a clear sign. I'm not saying I think this is capitulation. I don't think the FTX scenario is. It was a big deal. FTX was probably one of the biggest deals of the entire thing. But FTX was a clear sign of capitulation. People were getting out of the market. That was literally the point, like, of the whole thing. Like, hey, things are collapsing. Let's get out. So if you don't consider this capitulation, you should have to at least consider this capitulation, in my opinion. Now, again, I think capitulation by nature requires a short time span. This, in my opinion, qualifies. If we look at the Wall Street cheat sheet, which I don't have up right now, you can see that this is kind of your anger phase. And this really depends. The one thing that I may agree with is, have we entered in a sucker's rally? Is this a sucker's rally? Is this a depression state? Most people that I've talked to, and I take this stance before I talk to people, but I've almost literally every single trader that I've talked to that has been around for at least one cycle all agree with me that the bear market is done. And that's a chance that I'm willing to take, because we have a lot of reasons to think that it would be the case, and we are going to go to Bitcoin to discuss that. So we'll take a look at Bitcoin here. We'll take a look at the weekly. I'm also going to change this, and really, before we go to the regular chart, I'm going to look at Brave New Coin. I think you can also do the Bitstamp chart if you want to do that. You can do that as well. In fact, I think I will do that because I think it gives you real-time price action, unlike the Brave New Coin Index does. So I've already have this marked out here, but what I want to see here, we had a big impulse up. I'm going to get rid of that. Actually, no, I will keep it. And then I'm going to go over here, and I have this EMA 200 already out, so I'm going to look at this. And then I'm going to touch log position. I think I'll just get rid of that. Too much noise. So this is one thing I want to look at first, and I've been very vocal in my Telegram and Twitter, pretty much everywhere, right? If you've talked to me more than a day, you probably know that I'm a big fan of 200 EMA. For historical high time frames, I don't actively trade the 200 from a day-to-day, and one of the reasons is when you look at the day-to-day, you have like these choppy things, right? You got here, this went up and down 3 times, 3 times, 3 or 4 times, 3 times, or 2 times, let's say. So like 10 times total right here. So you're buy, sell, you're all kind of confused, right? On the 1 weekly, it's very easy. We didn't even have a touch until 2015. It crossed below, and it went back above. It didn't even technically go below, depending on your perspective. So that was a great buy-in, right? It went below, it touched back above. Right here, it went down below, it didn't stay down, and then it went back up. That was the end. This was literally the best buy-in you could have got, unless you caught this wick somehow. If you didn't, you could have bought in right here, and that would have been good, right? So your buy-in, let's just say it conservatively, your buy-in was right here. So 5,000 was, stretch that out. So this was your buy-in target, right? And I'm going to turn that green because we like green, right? So that would have been your buy-in. If you would have went right here, that would have been your buy-in as well. And we'll just kind of go right here. In fact, I'm just going to kind of raise this up. And so this would have been 2 great buy-in areas. And now we have another one. This is the first one that we've had in, since 2019. And I think I got some criticism the other day about this. Like, what's the point of having one signal since 2019? Well, that is the signal. I'm not saying you need to buy and hold this and hold it all the way down to here again. That's not what I'm saying. I'm saying is historically by itself, a data piece by itself, that is a historically phenomenal, I can't say that word, a really good buy signal. I'm not saying that you should hold that. I'm not saying that you should sell here, buy here. I'm not saying any of that. I'm just saying as a data point, this is the number one signal that you can look at for a buy. And one thing I was talking to a lot of traders this past week, this is the signal that bigger money comes into play. Typically, people stay on the sideline until this occurs, and then they get out, get in, whatever they need to, right? So, we've crossed this, so forget about all the other TA. Honestly, this is what you should be looking at. I have a video. It's my pinned video. If you're not subscribed, and if you want to get rid of that video, if you think it's too annoying, then you should subscribe. Just kidding. But in that video, it's 3 strategies that 99% of people won't do, and one of them is playing a high time frame, high moving average. And this is it. This is the number one example that I give. This is the number one example out there, and I don't want this to be ignored. I don't. I want you to face this, and you need to. The only way that you're not going to do it is because you refuse to. Okay, I want to put this in everybody's face, so to speak, metaphorically, and be annoying about this, because history tells us, look, right here, if you even waited to the close, you would have got in about $5,200 here. You would have got in at $6,700 here, $2,700. Still not bad technically. And so the thought process is like, okay, I'm going to buy here, but then what about? See, that's where people get hung up, right? So it looks like this. And it's like, I'm not going to buy this, and then they go into this kind of scenario. Let's kind of downgrade the speed, right? And it's like, I'm not going to buy these candles. Is it coming or not? Yeah. So like it goes down, right? And it's like, I'm not going to buy that. I'm not going to buy that. It's going to go down. It's going to go down. And that's exactly what's going on right now. People are concerned that this is going to go down. And I think that there's a very good chance that this won't go down. In fact, you don't want it to. You really don't. Because unless you're just a bear that wants 10K. I mean, that's completely possible. But the thing is if it goes down, it's going to retest, and that's not necessarily good. Retests on these high time frames are not good necessarily. The retests don't work like that on these time frames. So you want to see a follow through on the impulse, and so that's what that looks like. Anyway, you kind of see this example here, so I'm going to stop it. But so we have pretty much the same thing here. It's like, well, am I going to buy this or not? And so you kind of have this example right here that I mentioned. You kind of have this retest point between 25 and 24, 24.0 and 25.2. So what I'm doing is I've already bought a lot, but I'm buying in pretty much really good here. I'm ignoring the rest of the market. Honestly, it's more complicated than that, but unless I otherwise see some sort of follow through, there's no reason to really look at other coins. I know a lot of people are looking at all these other altcoins and just like, well, I'm going to make money there. And like, well, yeah, but look, Bitcoin is green for the day. Yeah, it's only less than 1%, but look it's better than losing 5%, right? So I can give some examples here. Like, look, on the weekly, like Solana's not even gotten a local high yet, honestly. I mean, maybe. To see how weak that looks compared to this is very strong. Ethereum looks pretty strong. Solana, it looks like a dud. It's wicking already pretty hard. Binance looks okay. Doge is still rolled over and wants to be petted. Matic looks all right, and Atom and Dot look okay, but everything else is like it's kind of failing for now, and they're not bad charts, right? They're not bad charts, but you can clearly see where the momentum is, and unless something changes otherwise, you should just stick with it. So, but anyway, I say this to say, we really should not ignore the weekly in that regard. Mainly because you'll realize that this could go up much larger than you think, and so we have actually 2 different examples that we could look at for this. We have this one, where this went sideways for about 4 weeks. And this is going to be the max pain scenario for both bears and bulls, right? I know people that are ready to sell this right now or ready to buy lower right now. And that was the case back then. I was there. I I actually think I bought somewhere in the 4,000 range. It was actually an accident. I was buying altcoins. I transferred to Bitcoin. I said screw it, and I walked away. And I came back when I realized we were up to 8,000. So, and I think I sold it before the COVID crash. Anyway, what I want to say is this is a Max Payne scenario because we could chop just like we did for 4 more weeks, and you won't know. And that's a hard 4 weeks to chop. That's a lot of impatient people, or a lot of people becoming impatient, and I can understand that because you have fears that it's going to drop. It's not pumping. Why isn't it pumping? You want to sell, but then you sell, and then it doesn't drop. So it's like, what's happening? And so that's where you got to put these things in perspective, and we'll kind of do a little analysis with that. So we'll highlight this and save it for later. Here we had another drop. This actually didn't touch down. I believe it did on the other chart, but this was another example, right? You know what? This is true. I realize that we are on a wrong chart. So let's go to we'll just go to Brave New Coin because that's what I always go to. All right, so yeah, see the difference here. And the reason I do this, and this is more accurate, I think, long term, because it has more price data. So you had this example here, and so we're gonna highlight that, and we're gonna move on. This one, you had a V-shaped recovery, so that was good. I remember a lot of people here talking about this V-shaped recovery, thinking that we're gonna get another one. And so V-shapes don't typically happen too often. Here's the thing, you can't really predict one way or the other what's going to happen. You need to look at probabilities, you need to look at options. You can't just be focused on one thing, because that's exactly how you get a bias, and that's exactly how you become wrong in that bias. I know people that have been shorting this. Now, I'm not talking about Capo, or whatever his name is. I'm talking about other people that have been shorting this for 6 months, and they've lost a lot of money, and they've been wrong. And I've been very vocal about. I've been very, very, very vocal. Please listen to my 50-minute rants on my other observations videos. That's one reason why my videos take so long, is I've been ranting about how the FOMC meetings are bullcrap. I've been talking about how all these meetings are just ways to distract you from making money. And guess what? We have made money in this market, and a lot of people are on the sidelines. And if that's you, I'm not making fun of anybody. I'm not. And so I say that if that is you, I say that for your encouragement, as that is a lesson learned. That is the tuition that you have paid to move on and focus on something else that will make you money. Don't focus on these little things. And I noticed that from the get-go. There's way too much speculation. Well, if this meeting does this, then this is going to do this. And there's a lot of ifs there. And statistically, at your best case scenario, that is a waste of time. I've realized that. Like, it's the same with politics. I'm not a political person, but I have family members that are just deep into the politics, and I was just talking to someone yesterday about this. What can you do? Like focusing on these politics that you can't judge the outcome, right? Like in America, we have people, leaders, some leaders I like, some leaders I don't. That's just the way it is. You're always going to have people that you like and people that you don't like. But what of those can you change? These policies, you can't change them because that's what the elected officials are for. That's why you vote, And the time to vote is no longer here right now. That's next year, I believe. 2024 is an election year. Until then, you just, it is what it is in that regard. So you focus only on the things that you have control over. And so going back to the finance stuff, the FOMC meetings, I've never seen anybody focus on a single FOMC meeting, PAL meeting, anything like that until after the COVID crash. And when the COVID crash happened, people started to panic and they started looking at the government for answers. They started looking at it for, things, the shots or whatever, things like that, right? Looking for answers. And I'm not saying it's good or bad. Everybody's got their own opinion about that. But what I'm saying is regard to the finance part of it, everybody's like, oh, what's the next meeting going to say? You got the stimulus checks, you got the inflation, you got all this stuff. Like, there's panic. And I can tell you right now that if there's one financial based thing that I do not like crypto Twitter about is the fact that crypto Twitter is obsessed with the markets collapsing. They want a big short 2.0, 3.0, whatever. People are upset, and it isn't just the crypto Twitter world. It's the regular finance world too that does it. Not they don't do it as much. They do it probably more annoyingly. I'm just used to the crypto world too. But people are obsessed with like trying to predict the next big short or the next margin call. But people don't realize that was a one-time scenario that was a mix of intentionality and happenstance. And the fact that so many people are trying to look for a next big short means the next big short is not going to happen. You know, and I've heard a really weird quote one time. Very strange quote. I don't know if I agree with it or not, but like one reason that we may not elect the next Hitler is because we compare everybody to the next Hitler. And it's very, very interesting perspective on how you view things. Like you try to label everything as the next big short, the next 2008 crisis. Well, that's probably not going to be a crisis as much as you think, or you're going to be too desensitized to a crash to where you think that's not enough. And I know people that still think that we are going to go to 5K. Still think that we're going to lose 50% on the stock market because of that reason. I think that they're just desensitized from what has happened versus their expectations. And guess what? Nobody, not even myself, not you, not anybody, is going to know exactly when the market's going to stop as far as the bottom, the top, whenever. That we can speculate, and that's it. We just need to keep an open mind on what that is and be open to the fact that we're wrong. And I can guarantee you, I'm not saying this is financial advice, but I almost would say this is like once you start to realize that you cannot get everything right is when you start actually being more right. When you actually start seeing a true understanding of the markets, what the market is telling you, what your gut tells you about XYZ, how you can take profits, how you can calculate risk management, things like that. You need to be open. You need to have an open mind with this. You need to have a humble mind about this. That's a big thing I have with a lot of CT people. They're very ignorant. They're very ignorant. They're very arrogant. They're very brash. And I'm not. I think those are terrible personality traits. But I'm not going to step in and tell them one way or the other. My thing is for you personally. Have a humble heart. Have a humble approach to these markets and let it show you versus you trying to find or force something, right? So it's like jumping into a river. You can feel the currents, you can feel things go on, and it'll give you direction. I'm not trying to go namaste on anybody or nothing like that. The whole point is just twist that around, turn that 180 on the markets. Have a little bit of a humble approach to this. Don't get arrogant. Don't get greedy. People talk about being greedy. Be greedy when other people are fearful, or be fearful when it's time to be greedy. Don't do both, because fear generally is not a good trait, and greed is generally not a good trait. So, just have a neutral approach. Have a humble approach. Lower your emotions as much as you can. If you make life-changing money, take it. Don't be afraid to take. Don't be afraid to take it, because honestly, the times that you are afraid to take profits are probably the times that you should take profits, and vice versa. So if you're afraid, chances are you should not be afraid. So anyway, I digress from that, but that's all part of this whole issue here. I'm going to go here on the daily. Let's see if I can find it. There we go. So this is what that looked like on the daily. From the weekly, it looked pretty much just a chop, but here this was kind of a bullish scenario here. So what can we analyze about this? For one, we had a bearish one-day divergence, right? We had a big drop down that was relatively big in size, but it still maintained. It didn't go down any lower. So one thing that we can view this as, let's just get rid of this for now, is we can see that here's our line, right? So we can kind of view this right here as a resistance. We never touched that, by the way. So this is a very interesting scenario, because we we didn't really touch anything as far as resistance goes. I mean, we had this here, and so that kind of counts. So that's a we'll label this here. That's probably good. But other than that, this is all empty space, and we didn't really challenge this level too hard, honestly. And we did revisit it. That's one reason we revisited it, because even in a COVID crash, you can still rely on the markets doing what the market should be doing. So anyway, we had this sort of slow chop upwards, and then we had the breakdown, and this didn't go anywhere, and then it actually went up. We had another divergence. So again, this is very key, because this was a major divergence here. And let me see what my liquidity script said. We didn't get one until here, and then we dropped there. So, and I'm going to analyze this as well. So from my trend, I'll get rid of liquidity. So from the EMA, we have the touchdown here. From the trend, we touched on the blue. So for me personally, and this is why I have the A-Rin trend. If you want it, you can purchase it outright, but it's also going to be on the bots as well. It has gone up. It tried to approach resistance, and it went back down to the trend. And so usually this blue band is a type of trend resistance for me. Typically, it tends to ride this out. You can see how it kind of rode, I don't know, up down through here, and then it finally broke down right here. But we kind of had this thing. We had the trend change, but then it went down, and then it recovered. So for me, this would have been a little bit easy. I probably would have got out right here, if I'm being honest. We had the resistance, we had the divergence, and then I probably would have got in back here. Definitely at this area right here. So what we can see with this, though, get rid of all this, is that it didn't even touch this support. We had the small bleed up. We also had this kind of touch right here, so that worked out very well. So that's something to keep in mind when you have a play like that. Like, don't be stupid, right, so to speak. I don't mean to really say that to anybody, but like, don't all of a sudden just panic and sell. I think right now is a very bad time to sell. I do. Even despite the fact that we have this going on, again, historically, 200 EMA goes on a large uptrend like this, and so I don't necessarily think it's advantageous to buy either. Because we're kind of in a sticky situation. But I think I am definitely way more bullish than bearish. I do think, I don't want to necessarily say that you shouldn't buy either, because I think long term that is the play. And so I'm kind of analyzing this so we can analyze the next set, and then we can analyze the third final set. Here's what we had here. This was the V-shaped formation. We had a lot of panic. I had a very, this was probably one of the worst A-Rune liquidity signals I ever had on any chart, and that's basically because of the COVID crash. I don't want to make excuses, but that's just what it is. One thing that we see here is that we went obnoxiously low. No, that's not the RSI. Right here, we got right around 17. So one reason I have this is that's why I got the blue band. When it recovers, that's a good buy signal for me typically. I don't typically buy because of that, but that's one thing that I look at. And so we had kind of the Dalai Lama, so to speak, recovery, and then we had the blast up here. And so that's another thing that we can look at. So let's look at the current daily. And so we have this right here. We got this uptrend. This looks very similar to the first scenario in 2019. So this is what I'm going to be looking for. We have a little bit difference of a thing. We have this kind of resistance here. That's doing its job so far. But this is where I would be focusing on more of a bullish bleed, so to speak. And so let's get rid of this. I'm very much looking at this low. I'm going to try to keep that held. I think this needs to, let's go back. Let's go back to, this gives us another perspective and get rid of all this. We do, before I delete this, we do have a wedge here on the 4 hour, so that's one thing I'm thinking about with the liquidity sell signal. So that's one thing I am considering. I don't want to just say that we can buy this. This is very substantial. We got the triple div. on the RSI and the AO. So this is something that I'm looking to see a bearish price action, and I think that we are going to probably get it sooner rather than later. So we'll see. Right now, there's different ways to play this. One, I'm being cautious about this, but two, if this breaks and this becomes invalidated, then I'm ready to long. And so that's what I'm looking at. For the daily, I'm looking at more of the long-term perspective on this. And we'll turn this on. We kind of got another bullish day, honestly, so far, but this is, as long as we maintain this low, I'm very, very, very bullish. As long as we maintain this section, I'm very, very bullish. Just one less very, I guess. So that's how I'm viewing it. I don't see any other reason to all of a sudden just sell. Like, people have usually one or two mentalities, like this is a suckers rally, which is evident that people think it's a suckers rally and that we're going to go higher. Another group of people think that we should just sell just because we're up so high, and that's not the case. And I've told people in the academy that this is one of the major things that I make all the academy members use as an application to all of their trades, and this is literally like 3% of the academy is just this next sentence: don't take profit until weakness. Okay, that's it. And I'm not saying that you shouldn't take profit at all. I'm saying what I probably would rather should say: look for weakness as a way to feel convicted to get out of the market. Okay, because you can have these rallies. Because what if you sold here? You sold here, you sold here, you sold here. All right, I'm definitely selling here. Okay, well then it went up. Okay, now I'm definitely selling here. Oh, it went up. I'm gonna sell here. I'm definitely selling here. Oh, maybe I'll sell here. See what I'm saying? Like, you had like 10 opportunities to sell, and we are 1% away from the all-time local high. A 9-month high, basically, so to speak. Pretty much ever since June. So this is a long time. I don't want people to overstate this, right? We have 280 days pretty much that we haven't been this high on the markets. So I don't think that that's insignificant, and I think that it should be taken into consideration. I don't think that we should sell just because. I've never been a big proponent of that, and that's one evidence why. That's why people don't get the $1 million SHIB buy-ins or SOL buy-ins or anything like that. Like, look at the markets for all these coins, and you just stay bought in, and that's basically it. So yeah, that's kind of what I'm looking at for targets. A lot of my followers have noticed that I was a big fan of 30K. That's in my free Telegram. That was in my academy. I think I may have mentioned on Twitter, but I'm not sure. And so yeah, I still think 30K is a good target, obviously, because we're only $2,000 away. We got as high as 28.5, so 30K is pretty close, right? It's like right there. So I don't know. I feel like that was a pretty good guess already, and that was something that I made. I think it was a target that I had maybe in November, so I'll have to check. But and I'm not here to tell you like, oh, I got a target. Look at me. Like, it's nothing like that, right? I'm just rambling, but at the same time, you just got to look at the markets and see what it gives you. You just got to be open to that. You got to, again, not necessarily open your mind, but open your strategy to accept anything that the market will do, and have a humble approach to that. Because sometimes it's going to tell you, yeah, we're going to chop for 9 months, which is exactly what we did, and it's going to suck. But you just got to deal with it. You can't force something that's different, because it's going to be worse for you. I've done that before. I've tried to force something. I've became impatient. I've lost money. There's times where I did not sell when I should have, and I lost that money anyway. Like, there's times where, I said this in the academy before too, like, me and my wife's anniversary was coming up, and I bought her a very nice watch. But before I bought that, I bought it with the profits that I made at that time, and I was debating not doing that. And the reason that I decided to do it is because there's 2 or 3 other times before then where I did not do it, and I lost that money anyway. So I made it a point to where I'm going to utilize profits when I need to. So just be strategic about that. Again, open yourself to multiple strategies as long as they make sense, and have a humble heart to that. So anyway, that's pretty much Bitcoin. Honestly, we can say a lot about this. I do think that we might go lower. I think there's a good chance that we will. Let's put it this way. I'm leaning towards that first. So what I'm looking at with that is, I got the wrong one here. So we got this wedge, right? So I'm looking at the break of the wedge, probably touch down right around here. Maybe even possibly lower to 2,000 or 2,600. Or 26,000. Sorry. If this wedge breaks, that's what I'm thinking of. And usually the way I calculate that is I look at the price point, the dip from here to here. That's about 5%, and I just go like that. It's just as easy. That's textbook. So again, that matches the 26.6. So this is what I'm looking at for a target. My plan is to buy on the way down and buy 100% right here. And if this does not hold, then I'm selling everything again. It's just how it is. It's as simple as that. So that looks like this. We'll go back to the Bitstamp chart. So I'm already, about 50% or so loaded. I'm going to buy another, half of my sideline money right here, the other half like right here, if we get that far. That's the plan. And then if we get below this marker, selling everything. Selling it all. And that's about it. There is a bullish breaker here, so there is a chance that we could revisit 2,200 again. I don't know when or if that could be, but bullish. Those kind of bullish patterns do happen all the time. We had one here, and we didn't even retest till back then. So that's something to keep in mind. Let's see. We technically had one here, and we didn't retest unless you count that. So we'll see. I think it's very possible that we could revisit this. There was a divergence, I believe, on the third day. Yes, so we got that to consider. We are above the 200 on that. So kind of conflicting things there as well. But as you can see from this, is we had a divergence. I think that is a divergence. But we had that on the 1 day for sure, and it didn't go nowhere. It eventually tested back. So that's one thing where we could launch up and revisit this later in the year. That's completely possible. And keep in mind that this, we did touch, even though, we should go to the 1 week for this. Where do we go? Right here. Even though historically 200 is a good buy-in, it happened twice within a relatively short period of time. So that's something that I do want you to keep in mind. We crossed here, and then we crossed here within a year of each other. So I need to get rid of that presentation. Anyway, that's completely possible, right? So we could, we could keep going higher and revisit like a year later, right? So like something like this, and that's not going to look very much on a 1 week scenario, on a 1 year scenario, right? So that's completely possible. And weirder things have happened, right? So in fact, it's the exact same thing has already happened. So that's a possibility as well. But I think overall, we're looking okay. I'm not too concerned about this. I really am not, because we can dip pretty significantly. We can dip about 10 to 14% before I'm concerned about this. And alts have a lot more to lose, especially like coins like Solana that don't really have much price action going for them. So anyway, I think I'm going to stop there. I think I'll go very briefly on Ethereum, and then I'll stop there. So. All right, on going to Ethereum, pretty cut and paste here on the daily. We had the big consolidation. We went up, we tested up, and so this is a key region, right? We should retest this one. This is a little bit different in regard than Bitcoin is. I'm looking for this as a retest. If not, this is a deviation, and then that sets up a good short. Let's zoom out. to the weekly. 200 EMA is a little bit harder to analyze with this. I think Coinbase is one of the oldest charts. Excuse me. But we can't necessarily analyze this because it crossed twice. Typically, it still is a good scenario. Mainly because the 200 EMA doesn't happen very often. So statistically, you are going to eventually run in a good price target. And so here we had kind of a range bound. I'm going to say this didn't touch. It didn't. And then we're ranging here, and we still technically are. But no divergence on this. This is still looking pretty good, despite the fact that this has some trouble with the 200. This looks really, really good on this chart. And so this is a good time to expand higher. I think we can get to 25 pretty soon. Other than that, there's not really much else to say. We got the bearish. We don't have a bearish wedge. Honestly, sorry. I thought we did, but it's looking okay. We got we had this bullish squeeze, end up working in our favor. That was a good dip to buy if you did so. But other than that, looking pretty healthy. I think if we touch down to 1700, I think that's a 1680, which we're not far away from. I think that's a good buy-in for the long term. I think everybody's looking at that too, by the way. And so a lot of these things, like people, once the cross has happened, bigger money is paying attention. Not even if they're not buying, they are paying attention. So I don't want you to get discouraged or anything like that. Like people were so easy to buy. At the top of the market, 60,000. I made a tweet the other day, like nobody was willing to buy at 16,000, and now everybody wants to buy at 28,000. And so you gotta be mindful of where you're at on the market. So on the 4 hour, this looks kind of weak. Nothing really much to say other than I think it will touch into this boundary. So that's pretty much the end of the video. Let me know what you think. Look down in the description, see if there's anything that you like, and I will see you in the next video, hopefully, and I hope you have a good day.